Good morning. It's Thursday, January 4th, about 6 a.m. Central Time. Overnight, the precious metals, you have a mixed session here. You've got February gold up $9 at 20.52. March silver unchanged, 23.15. March copper down 2 at 3.84. And April platinum down 3 at 9.83. So looking at some things that came out here that impacted the markets yesterday, you had the Fed minutes, and the Fed officials really came out and said that it was appropriate to maintain a restrictive stance on interest rates for some period of time. They also indicated that constructively that the policy rate is at or near its peak, meaning that they're probably done raising interest rates. They are optimistic over the pace of inflation and that there is some clear progress there. They're going to remain data dependent, and as rates come down, it's going to be supportive to the economy, especially in areas that have been strained. Things like the housing sector, also used cars, things like that are just really sensitive to interest rates. But they also came out and said that there was really no indication, or the way that I perceived it was that there was no indication of a rate cut in March. So that's where the market, I really believe, kind of got ahead of itself. And I had said that over the past couple months, when we shot up from November into that end of the year, wherever that low point was going on up, that they were really getting ahead of themselves. And I thought that would be all bark, no bite, that Jerome Powell actually, he won't cut the rates the way people anticipate. But what we could do is we could play the data. When the data sells off dramatically, or when you get these periods of shocks, that's where you want to let some of the risk assets go, wait for that a more hawkish type of narrative come into play, and then you buy the dip, and you're going to kind of get this series of higher highs and higher lows in some of the assets that we like to play, things like the gold market, etc., where you've seen gold, if you look at a daily chart on it, you go all the way back to October, that low was right around like 1850, and then you come out into the November low was right around, say, 1950, and then we get into December, it was 2000, and now we're at this 2050 area. Now, I still think your key levels of support are like the 50-day moving average, 2027, 200-day moving average, 2013. You really don't want to see it trade much below there, because then it could start this cycle down where you get the series of the lower highs. I still think the market does have a great chance of going back through that 2100 level and filling that upward wick. Now, you do have some things going on over in the Middle East, where yesterday we saw an explosion in Iran. There were a lot of casualties. Iranian officials pointed the finger at the U.S. and Israel for their involvement. However, upon further investigation, it really looked like it was something that it had the fingerprints of ISIS behind it. Now, crude oil kind of got this 1-2 punch where it saw that initial reaction, and then it got this follow-through on Libya's largest oil field had halted production. So if you're trading oil, you're going to want to keep an eye on that. Maybe put that as something, on Twitter, where it's a column that you're following going down. If there's any indications that could come back online, you're probably going to see oil prices correct $1.50 to $2 pretty quickly. Now, today we're going to have the ADP payroll report. It comes out at 7:15. It's really been discredited recently, but the market does have some reaction to it. Most of the consensus is right around 115. We probably should see it come at or slightly below that number, as the last ADP report was 103. So really, it's been kind of this lackluster hiring recently that I think is going to weigh in on the report. Now, at 7:30, we'll have initial claims. They're expecting about 220,000. The last number was 215. That would be supportive for gold. The continuing claims also 1.865 million. That would also be constructive for the gold market as well. You'll have global U.S. services PMI for the December, and the consensus is 51.3, and that's in line with the expectations. Now, looking at the silver market, if you come back and you kind of look at this daily chart, you're going to see, besides that one breakout to 26, that corresponds with that Sunday night rally on the gold market. We've really kind of drifted lower and been in this sideways action. Throw up a chart, take a pencil, draw along 24.93. That's your critical level of resistance. Your support levels we've had kind of these pocket congestion areas right around the 21 area, just above it. That was your October low. You go into November, it's going to be right around 22, and then you go into December, it's right around 23. So I think if you're going to play that market from a long term where we see value as you start to step in around this 23, the 22, 21, but remember, everyone's got a little bit different as far as, what their risk parameters and things like that. I do think that critical long-term support, I don't really see a break below the $20 level. Bear in mind something cataclysmic coming out. Something like a 2008 or another pandemic comes out or things like that. But it's just not on the cards here yet. So you got any questions, futures option trading? Give me a call. I'd love to talk to you. 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.